Fed's Mary Daly says it's too early to claim victory over inflation. Featuring San Francisco Federal Reserve Bank President Mary Daly warned it is a ways too early for the U.S. important bank to claim victory in its combat towards inflation, the Financial Times suggested on Thursday. Daly's comments comes as U.S. client fees remained unchanged in July due to a pointy drop within the price of gasoline, handing over the first top-notch sign of remedy for weary Americans who have watched inflation climb over the last years. In an interview with the Financial Times, Daly did now not rule out a third consecutive 0.75% point interest charge upward push at the vital bank's next coverage assembly in September, but she stated that a half percentage point charge rise became her baseline. There's top news at the month-to-month records that clients and organization have become a few alleviation. However, inflation stays some distance too high and no longer near our charge balance purpose, the newspaper quoted Daly as announcing in the course of the interview performed on Wednesday. She additionally maintained that hobby charges ought to upward push to simply under 3.5 in step with cent by way of the give up of the 12 months, in keeping with the report. The Fed price range charge, the rate that banks rate each other to borrow or lend excess reserves overnight, is presently inside the 2.25% to 5% variety. Slowing U.S. inflation may additionally have opened the door for the Federal Reserve to move the pace of coming hobby rate hikes, but policymakers left no question they'll retain to tighten economic policy till price pressures are fully damaged. The Fed is a long way, far away from declaring victory on inflation, Minneapolis Federal Reserve Bank President Neel Kashkari said at the Aspen Ideas Conference, notwithstanding the welcome information inside the CPI document. Kashkari, the Fed's most hawkish member, stated he hasn't seen something that adjustments the need to raise the Fed's coverage price to 3.9% by means of year-end and to 4.4% through the cease of 2023.